as I said, you know, this market hasn't done particularly well since the start of 2011. But in terms of trading or closing within the 4,500 mark, it's still a better performance on average compared to other African markets.
True that. If you notice what happened, the market started to pick up towards the end of December, and the rally did continue into January. But there was the Safaricom effect on the market. As we've always said, Safaricom is a big bearing on the market. And when Airtel announced the slash in their inter-network rates, the price of Safaricom plummeted, and with it, it pulled down the market. Because if you look at other counters actually sustained their rally, sustained their progress going upwards. If you look at the NBKs, Jubilees, the River Minings, they continued going up.
Okay, let's talk about Safaricom at the moment, because they have had their bond issue. It has had good subscription. They will probably be able to raise money for broader expansion. But there's this whole question of the return on investment if the general environment is one for more tariff cuts, and whether or not they'll be able to recover the money that they need for their broader drive.
True that. I think Airtel was a bit smart in it. As they said, they're going for market. They're not really going for revenues right now. Unlike Safaricom, Airtel is not listed. So Bob Collymore has another problem in his hands. Apart from worrying about revenues and the price wars, he has to worry about his share price. But then the day, all the valuations on his company are based on his share price. So giving him an extra headache going forward becomes a bit of a problem for him. On their bond, yes, well and good, they've gotten the 4.5 billion. The question is, what are they going to do with the 4.5 billion? Are they going to roll out 4G? Are they going to boost their 3G? And the way they seem like they're talking, it's more like they'll go more for data, more improvement in data and increased data. But for the financial year ending in March, their revenue will be greatly hurt.
What do they need to do to try to get the share price up and towards the resistance level of 5 shillings that it was nearing by last year?
It will be very difficult, because for Safaricom themselves, they can't cut their rates because their margins are so thin. If they cut their rates down to 1 shilling, their voice revenue comes down quite a bit. Yes, data is growing for Safaricom, but it's not yet generating enough money. It's only close to 30% of their revenues. 70% still comes from voice. For them, for their price to come up, really, I think it's a matter of investor perception on the counter. The price is currently low, because even if you look at the price wars and the effect it will have on Safaricom, they will still be the highest earning company in terms of net profit after tax. So for real investors, it's still a company to invest in. So it's just that they need to do some investor education on how the mechanics of investing in a company, intrinsic value, fundamentals, and things like that.
All right, let's talk about another share price, and this one has surged to 4-year highs, and that's NBK. Shares up today 1.64%. Of course, we know that they'll be paying a dividend for the first time in a matter of 12 years, but is that sufficient to get the market excited?
Yes, basically most of the activity that is going into NBK, most of the people that are buying into NBK, and the reason why I bought into NBK was because there is going to be this rise as we get towards February, mid-February, when the banks start announcing their results. And there is a great expectation that they're actually going to announce a dividend. In the hope of announcing a dividend, then all this restructuring process takes place, government pulls out after they've received a dividend. And they better pay a dividend, because if they don't, their share price will plummet like no man's business.
And then when you look at NBK in comparison to other banks like the KCBs and the equities that have been favorites in the market, where do you rate this bank? And in terms of, you know, just categorizing banks as top tier banks, mid-tier banks, smaller banks, where do you think investors should be putting their money?
Naturally, if you're going for capital gains or capital growth, the mid-tier banks will be better. They're a bit more volatile, and they can do the surprises of 100% increase in revenue. If you go to your top-tier banks, if you look at your Barclays and your Standard Chartereds, even Equity Bank, you'll find their rise in profits will not be so much. They are more mature banks. But if you look at banks like National Bank of Kenya, Diamond Trust, Cooperative Bank, those are banks that are still growing, they're expanding, they found niche markets which they're going into, and truly their profits will be higher than, profit growth will be higher than the traditional large banks.
I mean, you mentioned Barclays, and of course news this week is that they'll be restructuring, particularly focusing on management level jobs. Has that had an impact on Barclays?
No, not really. The share price is still fairly up where it was when we began, maybe down a shilling or two. For Barclays, that will be good. Even for investors, that will be good. But that means they're planning on reducing their costs. It might also hint to us that they are not growing their revenue so fast. So to sort out their bottom line, you remove your middle line and you reduce your cost so that your revenue grows at the end of the day. It is a strategy that most players will take over time when revenues are not growing that fast.
And let's talk about the industrials. Bamburi done well today. Portland gaining 7.14. Is this the indication of a real construction boom set to emerge in Kenya and East Africa?
The boom actually has been there. The question is, when is the boom actually going to end? And if you look at the levels of supply and demand of housing, government infrastructure drive and development drive, cement companies are the best companies to invest in the medium term to long term, because gradually they will go up in price. I'll give you an example of Athi River Mining, which was trading around 70 shillings, 80 shillings around this time last year. And currently it's close to the same levels as Bamburi, around 190, 195. And as we go further, as long as the government is still focused on development, as long as there are housing issues in the country, you'll find demand for cement remains high. If you look at the figures for last year of production and consumption of cement, consumption still outstrips the current production in the country.
Okay, and just finally, I mean, issues of capacity, because we do know that housing financiers, for instance, like Housing Finance Kenya, they're able to raise money, they're able to finance projects, but they're not able to meet the demand that you're referring to. The demand, 150,000 units per annum. The industry can only provide 35,000. So in the end, it boils down to capacity, and where there's that demand, you might need to import cement and additional capacity to feed this growing consumer demand for housing in Kenya, and that may have an impact on the industrial sector, yes or no?
True to that, but if you notice the strides that most companies, the industrial companies actually are doing, the Bamburis and your Athi River Minings are all doing in terms of increasing capacity. They're all trying to increase capacity. They're all trying to look for places where they can actually make their cement cheaper. Some are building plants in Tanzania and bringing back that cement into the country. And you'll find, even if imports do come, they come only to cover the remaining part. But the first point of call for any contractor, for any developer, is the local company. Then you find the people that actually sometimes import are still the same cement companies that still import and just pass down the cost to the developers.